what's your impression of everything that we've seen over the past, I would say, week? Last weekend with what happened with Silicon Valley Bank, and just now with UBS taking over Credit Suisse.
I think, without being overly simplistic, to me, it's kind of like textbook. We've degenerated into a system of leadership at a crisis. We have a self-induced crisis by irresponsible fiscal monetary policy the last decade. I did not forecast the Silicon Bank issue, but I did have a view that we were heading to a crisis of some kind, and we've seen it. And we're getting a predictable response by government. And so I think it's sad, what's going on in the country, but what they're doing is what is necessary to be done. And they have to preserve the system. So I'm assuming that the Fed goes 25 bips on Wednesday, and 25 and done. They can accept a higher level of inflation and than they would like to accept because of the stress in the financial system. They have to stabilize the Treasury market. The volatility of bonds is so great that that's destabilizing the equities.
Well, Leon, I want to pick up on that because we've been talking about that. We've seen unbelievable fluctuations in the basic, most liquid instruments in the world, right? Treasuries. What's the read-through effect of just even that volatility on other risk assets? And how much further does it have to take that out in terms of the volatility pressuring equity valuations?
That's not my area of expertise, but I would say that this is a response to the debt buildup in the country. In 2017, we had $20 trillion of national debt. And today, we're knocking the door of $32 trillion 5 years later, 5 or 6 years later. It's just a growth rate in debt far in excess of the growth rate of the economy, which is going to create issues. Who's the buyer? The banks are not the buyer of bonds anymore. So you're relying upon the kindness of strangers, and they're probably not imbued with our financial policy. When they look at the politics of the country, it's also very depressing. We have a country that I think is largely centrist in nature. It's been taken over by two political parties with the radicals, radical right, radical left, ruling the day. We don't need this.
Well, Leon, we're dealing with a situation where the political overlay is raising questions about the debt ceiling debate, and we can get into that, and people are trying to figure out what that means economically and for the market. Your expertise is in the S&P, in the market, and market calls, and you've been warning about a recession for a long time. You've been saying that this is a self-induced error of monetary policy and woes, and I'm curious, first of all, whether you're getting more optimistic about returns because of the declines that we're seeing and because of perhaps people waking up to the reality of the potential for recession as you've been saying it.
Well, my view has been as follows. I tell the story about the Pharaoh. I told this almost a year ago on TV. The Pharaoh, had a dream. The dream was interpreted by Joseph. It was in the Bible. His dream was we're heading for 7 lean years after 7 fat years. And that is my view. I think the 4,800 on the S&P will be a high that will stand for quite some time. And then I kind of analogize that to my own career. I got my MBA from Columbia Business School on January 31st of 1967. Had a 6-month-old child at the time. Now he's a healthy 56-year-old. I had no money in the bank. Had a student loan to repay. They were not forgiving student loans. And I couldn't afford a vacation. I went to work the very next day. I joined Goldman Sachs for my 25-year career on February 1st of 67. The Dow was 1,000. In 1982, it was 1,000. And so I made my money picking stocks. I'm not selling anything to anybody because I'm a retired money manager, and I'm turning 80 years old in a few weeks. But I would say that I think we're in a stock pickers environment. I expect the returns in the S&P to be very pedestrian. I think what's going on in the world is negative price-earnings ratios. And I want to make this point. If the government is looked upon to moderate the downside risk, the government has every right to moderate the upside return. Okay? This CHIPS Act, I think Intel sits at a balance sheet of $50 billion. They don't need the government to build plants for them. They can do it themselves. I'm in favor of private sector solutions. And the extent that the political system is getting corrupted, that's negative for capitalism long term.
So, Leon, from your perspective, you have made your career in picking single stocks. Where are you putting your money now, given that you still are investing, if perhaps for yourself and for others? Where do you go?
I'm like a one-off kind of guy. I'm looking at a couple of these mortgage REITs that are yielding 14 to 16%, selling a discount to book value, where they're buying back their own stock whenever it's, in their view, cheap. But, those are one-off. My biggest exposure has been energy, and that's cost me some money this year. I'm generally of the view that world travel will come back, which will be a plus for energy demand. China coming out of lockdown would be a plus for energy demand. We're going to no longer deplete the Strategic Petroleum Reserve. We have to rebuild it. And we're not replacing reserves to the extent that we should be in terms of where we're producing.
Yeah.
So I have a bunch of oil stocks in my portfolio that have current yields of 5 or 10%, production costs well below current prices.
Yeah.
They're largely debt-free, and they're positioned to buy back undervalued stock. So my favorite is Paramount Resources up in Canada, POU. They produce oil for $31 a barrel. They're growing production at 15%. The stock yields over 5%.
Yeah.
And they have no debt.
Leon, bumping up against the clock, 30 seconds. Do you agree with Elizabeth Warren that there should be insurance for deposits that's more than $250,000 and that banks should have to pay for that?
There's very little that Elizabeth Warren says that I agree with, but I think we have to do whatever we have to do to stabilize the system, and we will do it. But I think I'm focused on the long-term implications of what they're doing. So I think that yes, they should do whatever they got to do to stabilize the system. It's a damn shame that we have to do what we're doing, that we never should have been in this problem. Mr. Powell, the Fed head, said that the stock market wasn't overvalued. This is a few years ago because of where interest rates were. He never bothered telling people interest rates didn't belong where they were.